The following is for entertainment purposes only. We are not financial advisors. We are not responsible for any losses, only the profits.
What's happening, Octo family? We're going to take a look at some more mortgage plays. Rocket Mortgage, we got some good comments on there. I want to bring one up from Savvy Money Show. Y'all heard of him? He's got a YouTube channel. Check it out. He's been with us watching our videos, helping out too. So great. He says Rocket went down on the back of its earnings call, previous earnings call, not this one. It's coming out in a couple days, because the board was green and came across as too cautious, saying they could have a lot of defaults, but with rising house prices, people are more likely to sell and downgrade than default. So that basically is exactly what I was saying in a nutshell. Yeah, I mean, the residential market is going up, but a lot of that, in my perspective and the big boys' perspective, is people are panic buying, panic selling, panic spending money. That's what always happens before big crashes, usually in the house market. Another character, one of my friends on Twitter, goes by Brycey. His name is Bryce, but that's his name on Twitter. Come here, click on this, follow him. He's got lots of great due diligence stuff he puts out all the time. He said, hey, I heard Rocket Mortgage was going to pay dividends. Haven't seen anything solid regarding that, though. That's big, big news. You know, that'll get the whole other spectrum of investors in here if it starts doing dividends. Another thing to note, the big picture too, is we are going to see quite a bit of liquidation, selling and stuff before this year ends, because people don't want to pay that extra tax that's probably happening next year. And so one way to do that is to pay out some dividends. So that they might, pull out $1 million worth of shares, whatever. It's not going to be enough. And they're like, okay, we got to calculate it out. If we're going to pay 9% more and more for employees and all that, we'd really give away some now in dividends and write it off before next year. They're going to calculate it out. So I could totally see this happening. They are raking in money right now. All mortgage industries still currently are. Giovanni Philippi, he wrote us on the video and said, hey, use Quicken in 2010 and just refied with Rocket Mortgage. Great company. They beat the Chase offer. So he's saying that he went to Chase Bank and after that, he went and got hooked up with Rocket, and Rocket gave him a way better rate. So that's good boots on the ground information. The most I've heard is, I hear from the people selling, like the big commercial people and like real estate agents, and they don't like it, but it's good to see, some consumers obviously like it. They're using it, right? So again, with the chart, just to re-bring it up, I personally like where the chart's at. It just looks good, Of course, it would be nice to get around 18, but I like it when stuff's coming back up, doing a little bit of consolidation, ready for the next leg up. Just totally confirms where we're going, right? If you haven't seen my other video on Rocket, check it out. So why did I show in that past video about Rocket? I was just talking about some commercial charts, commercial real estate charts, and not much residential ones. Because the ones leading the stream are the big fish in the stream. What am I getting at? A good way to see how markets are going is think the big picture. What are the big boys doing? The big boys I know have been selling since right before March and right when March hit. Right when the lockdowns happened, people were selling packs of 10 rental houses at a time for 5 or 10% discounts. They're dumping and dumping and dumping. Why? Because they see the big picture. So again, real estate is like this for residential right now. It's going up. People are panic buying and moving, right? People are coming out of California, going to Texas and Florida, Nevada, places like that where they got 0% income tax because of a lot of what's going on. But regardless, it's almost still in that panic mode, where people are losing their jobs and they start calculating it. And even like the Bay Area, they're offering people 10 to 20% dock and pay, but telling them they can work remotely. So you have all these Silicon Valley guys that are been making 150, 350 a year, whatever, and they come up and like, yo, we'll lower lower everything by 10% and you can move and live wherever you want and, you know, work in your living room. And they're like, let's see, if I move to a 0% state income tax and I'm paying 13% interest, or interest on your taxes basically on your dollar in California, it just makes sense. So you have a lot of that happening, and the panic buying and selling. What is it looking like? It's, again, to me, looking like we're getting kind of to the top of the big real estate boom. The banks, the proof with the banks is that the interest rates, when interest rates are as low as they are, it usually means it's a good time to sell, not buy. The United Wholesale Mortgage is another company we're going to talk about now. I actually did 1 or 2 videos on them right when this came out. The one who brought this out was a SPAC. It was Gores, Alec Gores, one of the biggest dogs out there for SPACs. Guy's cool. Biggest SPAC deal ever, in fact, was just announced. It's with a $16 billion wholesale mortgage lender, United Wholesale Mortgage. UWM will go public later this year through the highest valued deal with a blank check company ever. The company said Wednesday it has plans to merge with Gores Holding IV, GHIV, a special purpose acquisition company or SPAC. Zero sponsor Alec Gores. Transaction valued them at $16.1 billion, surpassing the $11 billion combination of Multiplan and Churchill Capital III, backed by fellow SPAC veteran, Mr. Michael Klein. How many times talk about Mr. Klein on this show? Huh? So, the guy who is leading this is a rock star. If you want to know a good person to look at for running a company, he's good hype, but he's also smart and wit and boom, boom, boom. Watch this guy. He's super awesome. I have this video here, just his personality. It's just great. It's infectious. He's a go-getter, all that. This company here is more on the commercial backside of lending, where let's take like Chamath's Open Door, so IPOB or IPOC, can't even remember, and this Rocket Mortgage are kind of on the consumer side. This is more the back end. So you go to your mortgage dealer, and your mortgage dealer is going to be like, okay, we'll find you the best rate through the best company. What do? They just go to this dude's website. They go to UnitedWholesaleMortgage.com and just spit the information in there, and then boom, it spits out approvals, denials, and all the above. They also have a placeholder in their deck for a dividend. The following here was written by a friend of mine who does not want to be disclosed. So many anonymous and hidden. Here we go. They also have a placeholder in their deck for a dividend. So looking forward to see what they do. Their Rocket has not declared it will be a dividend payer. This one is a sleeping giant. It won't moon to $20 or $30 by closing, but it's compelling nonetheless, especially if you plan on holding at least 1 year for capital gains treatment. Yes, I understand the cyclical nature of mortgage business as well. Deal was announced on probably the worst week SPAC possible and caught up in a lot of market turbulence. So when this came out for the Gores, I agree. SPACs have been hurting like the past month or two, right? It doesn't matter what's coming out, it's just sitting there doing nothing, right? A few initial observations on this one based on the filed investor presentation, link here, and proxy statement, link here. I also took a very close look at Rocket when it IPO'd. This one is similar to Rocket. They are guided to 2021 to 2022 earnings instead of 2020 for valuation because they know 2020 is a record year. And looking at 2020 valuation multiple would appear artificially low. Don't let the decline in 2021 results versus 2020 scare you. Attractive entry points at 9.5 2021 earnings. Rocket's IPO was about 13 times 2021 earnings and has traded up since then. Yes, they are smaller than Rocket Mortgage and don't have the same brand value since they are not DTC, direct to consumer. Remember, they're mostly direct to businesses. But it's still a meaningful discount. And from a benchmarking perspective, they have been growing faster and perform better when it comes to originating loans. See page 26 of investor presentation. Potential justifiable upside of the near future forecast. They are forecasting a decline on gain margin. Spread on rate, which is one of the ways these companies make a profit in 2021, probably because they assumed some interest rates hikes next year in 2022. The Fed has commented publicly on this recently, stating no rate increases through 2022 and likely through 2023, which is nuts. But remember, this was said by Powell, Jerome Powell, who is probably not going to be working for the Fed next year. Companies gained margin in August was over 325. Good sense of where business is running today, but they've assumed 180 average for 2021. Content on page 20 of the investor presentation suggests they are approximately 4 years of runway given the sheer volume of loans that are in the money for a refi. Okay, so they make money on that too. So what we're getting at here is if the rates do stay with Powell's predictions and the rest of the Fed, which they could, people are still going to be refinancing for quite a while. I think we had definitely some big booms of refinancing, but you're going to get waves. Usually when money is needed, around December or January, once they get the credit card statements from December, people are like, wait a minute, I can lower my mortgage by $150 a month. Makes people start to think. Market view on home buying, purchase mortgages instead of refinancing mortgages. Where's the company advantage over retail lenders is magnified. Is very bullish right now. Look at home builder stocks. I hold a few. Given macro and demographic trends such as latent demand from millennial buyers and low interest rates. If you ever don't believe rates will stay this low for the next 2 years, the biggest competitive edge of the broker/wholesale channel comes out when interest rates start to rise. So what is he getting at? These guys are like wholesale, which means they're cheaper. You can probably get the best rate through these guys. One of the reasons they're just whooping the market. They are rock starring it right now. This company grew from 2016 to 2018. Over that same period, the 10-year yield increased from 1.5%, and Rocket's mortgage originations business decline was in the double digits. Based on reviewing their proxy statement, this company focuses on high-quality borrowers. Average FICO score of 745 for 12 months ending in June. 99% of their loans are either conventional, conforming, or FHA/VA, which means no jumbo or subprime lending. So focusing on like VA loans is huge because most people in the military have very, very well-established habits. Owner and CEO appears to be very competitive and engaged in the business. He's an NCAA champion. That's a college basketball champion. A lot of videos, interviews of him on the internet. All the proceeds from the deal are going into the business, so they have even more liquidity. This is very encouraging to see. Appears one of the reasons they want the cash as part of the deal is to increase their servicing portfolio, which is great. Instead of selling these services rights off once they originate loans, the company will retain those rights, which will provide a steady stream of cash flow going forward. So we've talked about this before, how most of the banks work is the Fed or whoever comes out and says, hey, bank, for every $1,000 you can get, you can loan up to 10 times that amount. So if you get $1,000, someone brings in $1,000, put in a savings account, the bank can loan 10x that to someone else. But what happens when they have so many loans out there and not enough money coming in? Banks sell packets, big, huge 100,000 packs of their mortgages to other banks for a certain amount. But these guys are saying, we're not going to do that. We want to hold on to these. Smart. This is the perfect time for the company to start doing this more, given all the loans they're originating right now are at record low rates. So there is significantly lower changes of those mortgages being eligible for refinance in coming years. So again, that's a massive problem. When mortgage rates are super high, banks are more apt to take those loans and sell them off, right? So anecdotally, I've personally gone through the home buying process using a mortgage broker instead of a traditional bank or retail lender. And it was night and day difference in terms of speed, ease of processing, getting competitive interest rate. So you can just give that dude a call. United Wholesale Mortgage. Looks like a weird deal at first glance, but these parties clearly know what they're doing. They had their initial proxy filed on October 2nd, very quick turnaround after announcing the deal on September 23rd. Very curious what others think on this one. I'm not looking for input from $50 highly on stock investor who thought the stock would be at 80 or 100 in the next few months. So he's looking for is he looking for growth or value? I think it's kind of one of those middle ground ones. Could be a unicorn, right? They're probably going to pay a dividend. They're raking in the money. They're still new, and they got an aggressive CEO, and they're still growing. They just got the SPAC money to help aggressively grow. I like this other than the sector it's in. I still very much for sure that the residential market will start to bottom out and then go down eventually. But I say regardless, we at least still have another couple quarters that are going to be fantastic for these guys. How about some more news? United Wholesale Mortgage announced closing of $800 million senior notes and intention to issue a regular annual dividend. Look what just came out on Friday. And intention to issue a regular annual dividend upon closing of business combination. This is huge. It's going to bring in those long-term value investors too. Oh, they pay a dividend? That's right. They pay you to own it. Today announced its closing of the previous placement, $800 million, an amount of 5.5% senior notes due 2025. The transaction resulted in approximately $791 million in net proceeds to UWM. This financing allows for previously announced pending business combinations with Gores Holding. That. Matt Ishbia, the president CEO, said, "It is a testament to our strength of our business and the dedication of our team members and clients that UWM has for 5 years as the largest wholesale lender in the residential mortgage industry without previously accessing the capital markets." It's a lot to say. Largest wholesale lender in the residential mortgage industry without getting money from other people. That's huge. Now imagine what they're going to do with that money. On the heels of the best quarter of the company's 34-year history, UWM continues to capitalize on success by establishing access to the unsecured debt market as we also proceed down the path of closing our previously announced business combination with Gores. I'm not going to read the rest of this, but I was listening to some interviews with the guy too. So he's talking about trying to compete a little bit more with the retail side of it, right? So he wants to go more against like the Rocket Mortgage people, which is fantastic. So he's got the whole back end commercial stuff, which is their backbone, but now he's going to go after Miss Smith. She's bored sitting on her couch on her iPad like, "Honey, I want to move closer to my parents. Look, we're approved." Okay? They might need to do a rebrand, People like brands, the emotion that it makes them feel when they say it. Rocket Mortgage, going on up, moving on up mortgage, which is fine. So he didn't say anything about rebranding. That's just me talking, but he's definitely saying he wants to get into that. He's obviously got some game plans, so I'm pretty excited to see where this goes. As y'all might know, this is a SPAC. It's got a floor, meaning it can't really go any lower than where it's at. Where's it at? It's sitting at $9.90. When this first announced, it only went up to $11.35 and just bled out to the floor here. After this is done switching tickers, it's not a SPAC anymore, it just is who it is. This could definitely go down. So this floor is removed, it then can go down. However, we also have warrants available. What happened with those? Those went all the way up to $2.90, let's call it, bled out, same thing. Where are those sitting? They got down to 95-ish cents, and now they're at $1.11. You know me, I like this chart. If you know me, I like this chart a lot. It's shown what it can do. It's coming down. It hit looked like a wall here, and then it's bounced up, and now it's consolidating a little bit. Just like I'm talking about a bunch of my videos, this looks like a good place for me to be, right? How would I play either of these? I think if you want to get into the mortgage, get some skin in the game. Personally, I would like to get these warrants. Because I'm more about multiplying, right? I could see these warrants multiplying way faster than this $10 common right now. Could this still multiply? For sure, get to 20. But these, man, SPACs right now are still sketchy, especially right after they switch tickers. But these ones that have been so beat up, and then this one has got a lot going for it. They've actually got money coming in. They have a product. Yeah, I like it, right? And then, you know, with Rocket, you can play that however you want. Again, same thing. I'd say if you want to park some money in this, you'd probably be fine. Right now, it's like a fantastic entry. It's already almost, it's getting up to like $34, and it's only sitting at 21. Where's it going to be in 2 years? Where do you think this is going to be? If you don't think it could be any lower within 9 months, I don't think it could get much lower in 9 months. I would think that. Just look at it. You know, of course, there are options available on this one too, but just be careful. Don't forget you can buy in the money, a little bit safer. Or, you know, we got to keep in mind too that with the volatility and everything going on at the market and the world and all that, we could still and will still have a rug pull where the whole market tanks and all this will go with it. Keep all that in mind too. Regardless, we can't always be living in the scared dark, so try to think that, keep that in your macro thesis on what y'all want to do. Thanks again for watching the video. If you haven't joined our Patreon, please do it. I actually gave them this information, I don't know, week 5 days ago or something, sliding them stuff way before everyone else. Even got another video that might come out today, but might not. But my Patreons have had the information on that. They're buying stuff early, even before it's cool. Join them if you want. It definitely helps out. Y'all take care.
Did you know that we give away free silver? Simply leave a comment on the video, and as long as you're in the continental United States, you can be automatically entered to win. Please friend us on Twitter and StockTwits.